how have banks responded to perhaps that need that businesses need to look outside of the UK, I know into some difficult markets, but into new markets that they can start exporting to?
So for a number of years, Huw, people have been talking about export-led growth being a way out of this current economic malaise in the UK market. Now, there are lots and lots of enablers for that, and I'm not going to touch on all of them, just two things. One is export-led growth exporting relies significantly on trade finance. A number of banks, your predecessor included, have significant trade finance operations. There has been a lot of investment into trade finance over the last few years because they generate attractive fees for the bank. They're not as balance sheet intensive as other business lines. But of course, the regulator has taken a different view, and the capital charges now being applied to trade finance make, for some banks, it prohibitive. And it goes back to this confusion that we have between policy rhetoric and the actual actions. All over the press, we've been seeing what's been happening in India, and there are questions about potential, or question marks over the potential slowdown in China. Brazil is having a challenging time. So all of a sudden, the economic growth engine of the globe is starting to slow. So betting the house on export-led growth in itself is, I think, is potentially challenged, albeit we are seeing some encouraging signs.
So Phil, would that be fair to say that, okay, there is trade finance, it is available, there's always going to be a price around trade finance, but would it be fair to say education has moved at the same speed in terms of helping the smaller businesses think about those other markets, and the banks have supported?
No, I don't think so. I mean, we're some way behind our closest European competitors, namely Germany and France, who both from a banking and a government perspective, support exporters. I think there's a huge cultural issue around exporting, I like to use a story that I've used before, which is when I started my first business in Merseyside, our first export market was Manchester, and the next one was Yorkshire, and then beyond that, and it really was that sort of step change approach to how we expanded from our very parochial business base. And I think it needs that element of gradual learning to be able to to target export markets. I think what's really interesting from a macroeconomic perspective in terms of export is it's challenging, but we are never going to find growth within our own domestic market to create a tax revenue to support rising health and welfare costs, to support the unquantifiable pension deficit, and to support the ongoing debt repayments. The only way to rebalance our economy in that respect, and it's a cash respect, is to trade internationally.
So how do we get the heads up from Leeds to kind of Leipzig to Lahore? What's the difference? What can the banks do in terms of helping the system?
I think it gets back to this big data idea, and the idea you've got to build up information sets, and banks want certainty, and they want to reduce uncertainty and build up confidence. And if you've got confidence like you were to move into Yorkshire or move into Manchester, then the banks will be with you, because you're adding risk. When each market that you choose to go to, you've added risk, and you've got currency risk, and you've got. But so it's very difficult for
to underpin that confidence is knowledge, isn't it?
Yeah, that's what I said. So the big data idea is a very good thing. If you've got a central database of these markets, and you can take it off the shelf and show the banks, or the banks are very aware of those markets, then you're gonna free those markets up.
And or the other way, the banks then sharing, how do they best share that data to give the confidence to that small business that we can do this? Because actually there's only 4 of us in this business, and actually if one of us does go, it puts strains on those small businesses in that sense. Okay. So yes, we've got some of the fundamental support is in place, but yes, we can go further with some of that help and support in terms of EFG, whether it comes from government, but also some of the data support as well, which gets people over the hurdle.
And in China, how much the whole green economy is growing and low carbon economy, and how much the government there is investing in that. our companies here should look at this as a huge opportunity because they have this global market, and then you see the government here compared to relative to what they do in China and Korea and United States and Eastern Europe, they're supporting very little companies in these areas, and these are the companies who actually had the opportunities to go global and opportunities to invest. So again, it's not only the banks that can solve all problems. So, and it's also the government as a co-player, and that's not about the government as interfering or trying to run the banks. That's actually the government being an active co-player, and I think that should be recognized.
But focusing that support.
Focusing on the growth of global growth opportunities. We need to understand the where is a global growth going to come from? Do we want to, in the UK, specialize in certain niches, or do we, which may be very interesting for several SMEs who can actually get a good living of that and have, enjoy life, or do we want to really invest in where the big growth opportunities are, where our companies can grow from small to medium to large, and also where we can actually solve the problem of the persistent trade gap?